Have you ever pondered over the secret to financial independence? Or wondered how some folks can bid adieu to their 9-to-5 grind while still basking in the glory of their youth? The answer lies nestled in the indispensable notion of investing. Don't let the term intimidate you. Investing, in its simplest form, is just a method of channeling resources, typically money, into various financial endeavors, stock market shares or real estate properties, with the hope of reaping substantial profits or fruitful outcomes. Think of it as your golden passport to the realm of wealth. Stepping into the world of investing, you lose out on golden opportunities to expand your monetary values considerably. It is an influential tool, a catalyst that aids you in augmenting your wealth, safeguarding it against potential risks, and propelling you on the path towards your envisioned financial objectives. It assists you in paving your way towards the much-coveted financial autonomy. It's the foundation stone in erecting a secure, flourishing future for yourself, your loved ones. Investing is like planting a seed, nurturing it with time, and watching it grow into a money tree. It's an adventurous journey filled with risk and rewards. It's a game where strategic moves can turn your financial vision into reality. So sit back, unwind, and get ready to delve deep into this riveting, wealth-amplifying cosmos of investing. First, let's demystify the term investing and brush away the haze surrounding it. Investment isn't some arcane lexicon only comprehensible to the hotshots of Wall Street. In fact, it's a straightforward, essential practice that involves making your money work diligently for you instead of just resting in your bank account. Now visualize it this way. You plant a seed today and patiently watch it grow, nurturing into a bountiful tree, bearing fruits year after year. The seed analogous to your initial investment, and the tree represents the accumulated growth of your wealth over time. Alternatively, consider this comparison. It's akin to procuring a hen that consistently lays eggs rather than repeatedly individual eggs. This represents recurrent income from a single investment, similar to dividends or interest. Here's yet another conception. Investing is like purchasing a coffee maker as opposed to spending on a cup of coffee every day. The coffee maker illustrates an asset that generates value over time, akin to an investment that yields returns. Furthermore, imagine it as buying a washing machine that saves you from your frequent laundromat trips and their accompanying bills. This signifies how an investment can lead to cost savings in the long run. Lastly, it could be akin to procuring an electric vehicle to evade those burdensome gas expenses. It exemplifies an investment that reduces recurring costs. You're beginning to grasp the concept, right? Let's dive into the primary stage of wealth building. It's savings. Inevitably, it's one of the most basic yet pivotal aspects of financial growth. The concept of savings is similar to the idea of preparing for a marathon. There's a need to build endurance, practice stability, and ensure a regular routine before the actual race. Similarly, creating a financial cushion through savings before venturing into the world of investment is crucial. Imagine attempting to bake a cake without having any ingredients. You might have the recipe, the procedure, even the oven ready, but without the constituents, a cake is just a dream. This is why saving is considered the cornerstone on which the magnificent edifice of wealth is constructed. One must view it as a safety net that catches you when you fall. Starting your journey of savings doesn't require you to have an account overflowing with cash. Instead, the process begins by allotting a certain part of your income towards savings. The amount need not be colossal. It could be as humble as 10% of your earnings. What plays a significant role is the frequency and consistency of saving. Inculcating this habit of regular savings can place you on the pathway leading to financial freedom. Let's delve into some effective saving strategies that can provide a significant boost to your wealth-building game. The pay-yourself-first approach tops the list as a tried and tested method. This strategy implies that as soon as you receive your income, you earmark a certain percentage for savings before distributing the rest for expenditures. This method eliminates the likelihood of extravagance that you are consistently fueling your savings. Another foolproof strategy is automating your savings. This involves setting up an automatic transfer from your checking account to your savings account every month. This technique makes saving effortless and significantly reduces the probability of raiding your savings for unnecessary expenses. The saying, "a penny saved earned," encapsulates the essence of savings. It's the process of setting aside today for a better tomorrow. So embark on your journey of wealth creation with a steadfast commitment to saving. It's the first and arguably the most crucial step towards investing and building wealth. Once you've accumulated a decent savings, it's time to move on to the next phase, investing. But what could be the best destination for your money? The wealth of choices can often be overwhelming, but fret not. The investment landscape is vast, but understanding the possibilities can be the key to unlocking the potential of your savings. First and foremost, you might think about dabbling in the stock market. Stock represents fractional ownership in a company, and investing in stocks means betting on the success of the corporate entities you choose. This investment method comes with a dual-edged sword. It holds the potential for high rewards when companies perform well, but it also invites notable risk from market fluctuations that could lead to losses. It's not merely about buying and selling. Understanding the company, the sector, and the market are paramount. It's a game where the stakes are high, but so are the returns. Next, consider bonds, which are essentially loans you give to a corporation or a government entity. Bonds are widely considered a safer bet compared to stocks. They offer a fixed return over a particular period, which makes them a steady source of income. However, they typically yield lower returns than stocks. And there's always a risk if the borrower defaults on their payments. Bonds are a sturdy backbone to any investment security and predictability amid the tumultuous world of investing. Another popular choice is real estate. It involves purchasing properties, either to earn rental income or to sell them later at a higher price. Real estate investment can provide a steady income, and there are potential tax advantages associated with it. However, it requires a substantial upfront investment and comes with ongoing maintenance costs. Moreover, property values can fluctuate, and finding reliable tenants can be a challenge. You could also consider starting your own business. This path offers the opportunity for the highest potential returns and the thrill of being your own boss. Yet, entrepreneurship also carries significant risks and requires a significant commitment of time, energy, and resources. It's not for the faint-hearted, but for those who succeed, the rewards can be beyond their wildest dreams. So, amidst all these choices, how does one decide where to invest? It's not a one-size-fits-all answer. It largely depends on three factors: your personal risk tolerance, your specific investment goals, and the amount of money you're willing to invest. For instance, if you prefer stability over high returns, bonds or real estate might be a more appropriate choice. Conversely, if you're in pursuit of aggressive growth and can weather the ups and downs, stocks or establishing your own venture could be the way to go. It's essential not to put all your eggs in one basket. Diversify your investments to spread the risks and maximize potential returns. The third step is to thoroughly understand the concept of diversification in your investments. As the adage wisely advises, don't put all your eggs in one basket. This phrase acts as a potent reminder of the potential perils of investing all your resources in one area. The essence of diversification lies in spreading your investments across a variety of sectors, such as developing technological advancements, the ever-evolving healthcare industry, the promising sector of renewable energy, or the steady market of real estate. The makeup of your portfolio could comprise a mix of stocks, bonds, mutual funds, or ETFs from these diverse sectors. Diversification not only ensures a wider coverage of the market, but also acts as a balance, mitigating the risks associated with your investments. If one sector underperforms or suffers a decline, this could potentially be offset by the gains from your other holdings in different sectors. Now let's turn our attention towards some of the world's most successful investors who have consistently applied this principle in their investment strategies. Take Warren Buffett, for instance. Often dubbed as the Oracle of Omaha, Buffett is renowned for his diversified investment approach. He holds a plethora of shares in a multitude of companies spanning a wide array of sectors. Similarly, Peter Lynch, the legendary mutual fund manager, was a firm advocate of a balanced and diversified portfolio. His investment philosophy underscores the significance of spreading investments across sectors. Remember, when we talk about a diversified investment strategy, we're not seeking instant high returns. The key lies in its ability to minimize risk and foster a steady, consistent growth of wealth over an extended period. Our final, but utmost crucial step is patience. Patience, as we know it, isn't just a virtue, it's more. When looking to build wealth, patience isn't just an asset, it's the cornerstone of your financial journey. Reflecting back on historical marvels like Rome, we're reminded that its splendor was not created within a day. Likewise, amassing wealth is not an overnight achievement. It's a long-term strategy that requires unwavering patience and dedication. Economic growth and investment, for instance, is akin to a vineyard. A vineyard, requiring careful tending, takes time to thrive and bear fruitful results. It's not an immediate process, but a gradual progression of growth that eventually leads to a bountiful harvest. Take into account the world of real estate investment. Here, one buys properties with an intention to lease them out, generating a consistent income stream over time. However, it can take several years, if not more, before one can start witnessing the desired returns on their investment. Another example is investing in a budding startup. Such investments might take a decade or sometimes even longer to bear fruit. The company needs time to grow, mature, and eventually reward you with a profitable exit. It's clear that patience is the cornerstone to successful investment. Time becomes your most invaluable ally, your money your most diligent worker. This gradual journey demands you to allow your investments the necessary time to mature, to bear the most optimal results. It's all about nurturing your investments, allowing them to bloom at a pace that's natural, ensuring a steady and consistent growth of your wealth. So exercise patience, nurture your investments, let them bloom at their own pace, and watch as your wealth grows steadily and surely. The journey to financial independence isn't a straight path. It's a turbulent, convoluted road laden with both rewards and challenges. It's filled with peaks and valleys, moments of exultant triumph, and discouraging setbacks. It's an expedition that requires shrewd navigation and a stoic mindset. However, when you're armed with the right perspective, a steadfast plan, and a pinch of patience, you can overcome these hurdles and reach the pinnacle of financial independence. Let's delve deeper into the process. The road to financial independence is paved with milestones. These pivotal points on your path to investing and wealth building are what will guide you to your ultimate objective. They're the guidelines that will ensure you're always moving forward, always making progress, always advancing towards your financial goal. The first of these milestones is diligent saving. Every penny saved is not just a penny earned, but a step closer to your financial independence. Making a habit of saving, consistently and conscientiously, builds the foundation of your financial journey. It's this foundation that will support and bolster your financial pursuits. Next is investing, not just in one sector, but diversifying your investments across a range of sectors. It's about not putting all your eggs in one basket, about spreading your risks and increasing your chances of returns. A diversified portfolio provides a safety net, ensuring that even if one sector falters, another may thrive. But even the most meticulously planned and executed investments take time to yield returns. This is where patience comes in. Just as Rome wasn't built in a day, your wealth will accumulate over time, not overnight. It's a slow but steady process, a marathon, not where patience is a virtue. To crystallize the concept further, imagine the freedom that financial independence bestows. Imagine not having to worry about your bills or relying on a monthly paycheck. Imagine being able to live life on your terms, backed by a robust financial base that can support you not just in your years, but even further. Before we conclude, let's do a quick recap. Save diligently, diversify your investments, and harbor patience. These principles, combined with the right mindset and a proactive approach, are the keys to achieving financial independence. Now that you're armed with this knowledge, it's time to act. Don't just stand on, take the plunge, and kickstart your investing journey today. Remember, every great journey begins with a single step, and your step towards financial independence is no different. It's not magic, it's not about luck, it's about investing, it's about making your money work for you, building wealth one step at a time. And with these steps, you're not just on your way, you're already part of the journey towards achieving it.